The big stocks in focus this morning is Texmaco Rail and Engineering. It is up almost 7%, not just because of strong results that the company has announced, but they have also announced the demerger of their rail and green energy infra business. So let's find out more about that. You have Hemant Bhuwania, who's the CFO of the company, who joins in now. Mr. Bhuwania, thanks a lot for joining in. First, if you can tell us a little bit about the demerged entity. What will the financials of this demerged entity look like in FY24 and FY25? And are there any other verticals that you are looking to demerge in the near future?
Yeah, good morning, all of you. And many thanks for the invite. It's always a pleasure to be on your channel.
Thank you.
Yeah, the board has earlier taken a call that this division, Kalindi Rail and Bright Power, would be demerged by the way of slump sale into two of our wholly owned subsidiaries. But later, of late, in the last board meeting, the board again revised its decision and took that it would be demerged by the way of NCLT process, and the Kalindi division and our hydromechanical and bridge division would be moving off from Texmaco Rail to a separate listed company by the way of mirroring. So we plan that this would be, the entire exercise would be completed by next year, I think by Q2 next year, we expect. So for the year ended March 24, the result would be a console basis. There would be no separation for Kalindi, hydromechanical and bridge. But yes, for the financial year 24, this division would be moving off from Texmaco Rail, the mother company.
Okay, so just to understand, by Q2 of FY25 is when you plan to complete this demerger process, and in FY25 you'll start to see the demerged entity showcase separate numbers. Just to understand, if you look at the Q2 revenues of this particular entity, you had revenues of anywhere in the range of 120-130 crores. On an average, what kind of growth are you looking at post the demerger going through?
This division mainly caters to our EPC segments, that is for track laying, signaling, telecommunication, a bit of hydromechanical and the railway bridges that we cater to. On an average, you see that the turnover has been in the range of around 550 to 600 crore if you see the past trend. So we expect that it would be ranging in the same level as of now. We expect certain export orders from this division that we will be doing through. And as and when we get the orders, we have actually bet for a few of the export orders. So as and when we get the order, you will see a slightly improved top line in this division too, but not major.
Okay, all right. Hi, Hemant. Good morning. Thanks so much for joining in. A couple of questions. Since you've demerged this entity, what is the rationale? Will you be looking to get a strategic investor in? Is something like that on the cards? And also, do you intend on demerging any other segments of your business?
Yeah, good morning. Just a slight correction. This division had not been demerged. The board has approved for its demerger. We will be going ahead for the NCLT process, and we expect that mid of next year, that the entire process should be through. Yes, as of now, we would be going with a straight demerger. We are not looking for any strategic investors as of now. But yes, we are open for that. In case we get something, we are happy to look into that also.
And will you look at, I know it's not demerged as of now, but as you said, Q2, FY25 is when the demerger takes place. So maybe at that point of time, you could probably look at a strategic investor if it's needed, as you're telling us. What about the other entities, the other business verticals? Will you keep it together or will you further look to list more number of companies?
So other divisions mainly caters to our heavy engineering division, which caters to freight cars, the steel foundry, which caters to components for freight cars. And we will be also having the Bright Power division, that caters to overhead electrification and transformer process for the railways. So that business will be carried out in the mother company, Texmaco Rail.
Okay, all right. Hemant, hi, good morning. Prashant here. Let's just talk about the business as it stands right now. Could you talk to us a little bit about what's the sort of updated order book across segments? What's the visibility looking like?
So if you see on a consolidated basis, we have an order book of around 7,800 crores as of date. Of which heavy engineering and steel foundry comprise of around 5,600. Our rail EPC, that is Kalindi and Bright Power, as of today is around 1,700. Joint venture and various subsidiaries around 500. So if you see on a historic view, we have been doing wagons. Last year for the entire 12 months, we did a wagon of around 3,000 wagons. Whereas if you see my H1 results, we are 3,000 plus in the 6 months. So there is a substantial improvement or growth you see in the top line as well as my bottom line.
So will
Similarly,
this,
if you see the steel found.
So will the pace pick up? So that's about what, 500 wagons, right? Every month.
Right now we are at the run rate of around 600 or just over 600. Our target is to go up to 750 or 800 by end of this year, and by mid of next year we should hit the number of 1K wagon per month. That's our objective.
Okay, I just had
Steel foundry. I'll just take 2 minutes on the steel foundry. Steel foundry, again, you see we were doing production of the tune of 8,500 tons per quarter, which has again ramped up to 10,500 plus metric ton in steel foundry. So foundry also, you see we have done a substantial growth, and you'll see a better results for foundry division as well.
So, sorry, 1,000 wagons per month by the middle of next year, you said?
Yeah.
That's capacity. Right. So I just want to clarify. The last time we joined as well, you were telling us about this endeavor to move from 600 to around 1,000. That is capacity or that is execution that you're talking about? Capacity, I think, was likely to move up. When does execution move up to those run rates? So what is the execution now and when does it move to higher levels?
So right now we are executing at around 600 plus wagons on a monthly basis. Our target is that on a monthly basis by March 2023-24, we reach to around 750 to 800 wagons. And by mid of next year, we should be executing 1,000 wagons per month.
Oh, executing 1,000 wagons per month by mid of next year, right?
Yeah.
Okay, I just wanted to go back to the rail and energy business demerger. You said that you expect this turnover of 550 to 600 crores to continue, but you do have certain export orders as well. What is the quantum of those export orders that will come through and, over and above this 550 to 600 crores?
So we have bid for the export orders. So we have not received as of now. So
How
as and
much
when
is
we
that?
receive, so that is around 100 crores of as of now. So yes, we have bid for that. We are order has still not been decided. So we expect that yes, we should be coming out successfully in that order.
Okay, and sorry, the rail EPC arm, when do you expect it to turn profitable?
So on a EBIT basis, if you take out the depreciation and the finance cost, so we are into profit. But yes, if you see at the PBT level, this division is making loss. So once the restructuring and everything is done, I think we would be also reducing some high cost debts from here. So I think from mid of next year or from Q1 next year, you should see improved results for the infra and my green division too.
All right, Mr. Hemant, final question before we let you go. You also talked about a QIP. What's happening on that front and when does it come through?
Yeah, so the board has in principle approved last time to raise funds up to 1,000 crores by the way of QIP and 50 crores by the way of preferential. So we had applied to the shareholders and we expect the approval from the shareholders by 4th week of October. We will be going ahead for the preferential issue first. So we plan to close the preferential within October, I think first week of November. We have a 15 days time and thereafter we open the QIP. And once we have a shareholders approval, I think we'll again have I'll lead up to board to decide and to take a call on this.
And the quantum could be?
Sorry, I missed you.
Quantum? What could the quantum be?
So the quantum, we have got an approval of 1,000 that would be raised in one or more tranches. So once we have the approval for the shareholders, I think the quantum would be decided by the board. So
okay.
Okay.
All right.
Just one more question. You had said that earlier for the full business, right? I don't know if I missed this, but a 30 to 35% growth in revenues for FY24 was what you were guiding for. Do you stick to that target?
I think that we would be doing better than that as of today. If you see my results, so if you see my H1 results last year and the results which we have disclosed for H1 this year, I think we are almost double. We have increased by 100% almost. So you'll definitely see a better results from here on.
What would better mean? Could you quantify it? Will it be 40, 45% or more than that? And also, what could be the rough margin given that input costs have cooled off?
If you see my Q2 results, the EBITDA has been somewhere around close to 10.5%. I think that is as per the industrial norms. Definitely, we would like to improve on that. But yes, 10.5, I think it's as per industry norm, and we'll definitely try to improve that. the numbers too.
And revenue growth, 45%?
Come again?
Revenue growth, you said you'll do outbeat what you said earlier, the mid-30s growth, and half-year mark you've done very well. Give us a number. What kind of growth should you end up this year with?
So on the growth part, you see that as I told that 3,000 wagons that we did in the entire year. In last year, we did 3,000 wagons in H1. So if you extrapolate that, yes, we would be doing better than what we did in H1 in H2. So if you extrapolate, we'll get the numbers. But as a forward-looking statement, I won't be able to comment much on the numbers over here.
Okay, all right. For the time being, though, the street likes, what you have done so far, and they like the demerger as well. Good on that. The stock is up close to around 8%. Thanks so much, Mr. Hemant, for joining in and filling us in with all of those details.